Hi, I'm David Koch. This is the first in a series of videos by the accounting body CPA Australia that take a look at the rise and spectacular fall of what was once the biggest childcare centre operator in the world, ABC Learning. As the videos show, ABC Learning forgot its ABCs, which were the fundamentals of sound accounting. There's no doubt the entrepreneurial spirit is one of the driving forces in our economy. Those who lead our most successful companies need real courage and skill to chase their dreams. But ignoring financial reality in the pursuit of profit only leads to failure. ABC Learning is an example of a company that overlooked this fundamental truth. Problems in the way ABC Learning accounted for its activities, especially the way it valued intangible assets, were among the issues that contributed to an artificially inflated value of the organisation's worth. This led to the whole empire collapsing amid a failed bid to expand globally. But before we take a closer look at ABC Learning, let me tell you a bit about CPA Australia. CPA Australia has more than 122,000 members and a presence in more than 100 countries. As one of the world's most highly respected accounting bodies, CPA Australia can provide you with the strategic leadership, business skills and knowledge so you can add real value to the organisations that will one day employ you. Become a member of CPA Australia and you will develop the capacity to engineer successful business solutions in any industry sector. So, what went wrong with ABC Learning? To answer this question, we'll need to take a look at the beginnings of the business. Founded in 1988, ABC Learning experienced a slow but stable start. By 1997, it was running 18 childcare centres across Australia. But at the turn of the millennium, everything changed. One key development was the then federal government's introduction of the Child Care Benefit Rebate System, which allowed families to apply for subsidised childcare. This drove demand for childcare and was to become a boon for privatised, for-profit childcare centres, of which the largest was to become ABC Learning. In March 2001, ABC Learning began trading on the Australian Stock Exchange with an opening share price of $2. ABC Learning and its founder and chief executive, Eddie Groves, enjoyed a dream run from 2001 to 2006. It had fantastic media coverage and successfully courted a range of significant investors, including Australia's major banks and the Singapore government's sovereign wealth fund, Temasek Holdings. The high watermark for the company was a share price of around $8.60 in December 2006. Remember, it floated for just $2. At this point, 1 in 5 childcare centres in Australia was operated by ABC Learning.
The company's earnings growth was spectacular. It appeared to be conquering the world in terms of its monopolisation of childcare centres. Now, part of the reason for that was because of the government childcare rebate, and in Australia the government was effectively paying ABC Learning centres, indirectly of course through its customers. But that story was one that equity analysts caught onto. They put out strong buy recommendations on ABC Learning, and as a result the share price did very, very well.
With ABC Learning seemingly in a strong position financially and in an obvious position of dominance in the domestic market, in 2005 the company began to pursue an aggressive international expansion campaign, acquiring childcare centres in the United States and Great Britain. Despite this early success, within 2 years ABC Learning would experience a write-down in asset values of some $280 million. Eddie Groves would also become one of the highest profile people to experience a margin call in Australian financial history after the company's share price plummeted to 54 cents in August 2008. Ultimately, in November of its 20th year of existence in 2008, ABC Learning would be placed in the hands of administrators. Grove's personal stake in the company would be obliterated, and creditors would be left out of pocket to the tune of more than $1 billion. Off the back of such a strong start, just how did this happen? Well, ABC Learning pursued an incredibly aggressive growth strategy, acquiring existing childcare centres at a breathtaking rate. In order to do this, the publicly listed company issued shares to raise capital and went into debt to finance these acquisitions. As we'll see in the videos to follow, ABC Learning reached critical mass in 2007. But by the end of the 2007 financial year, the company's financial reports, the statements of financial position, financial performance and cash flow told the story of an organisation about to collapse. Astronomical debt, a crisis of liquidity, and asset values inflated to levels that would prove impossible to realise spelt the end for ABC Learning. As we'll see as we analyse the financial statements more closely, the business paid too much for the childcare centres it bought during its growth phase. In 2007, it was also burdened with massive debt, to the point where for every 30 cents in equity, the company owed more than $1 in debt. Examining ABC Learning's income statements will illustrate an organisation that took its eye off the ball, a cost blowout, as well as ethical issues such as the disclosure of related party transactions. ABC Learning's statements of cash flow will show that in 2007, its loan repayment commitments had contributed to a negative cash flow position of $20 million. This, combined with a huge drop in net profit, resulted in an unsustainable position for the company. In the final video, we'll look at the 5 lessons that can be learned from ABC Learning's demise.
The tragedy of the ABC Learning case is that it's not a new story. Every decade or so we see the same issues unfolding. In the ABC Learning case, we saw a recognition of revenues that were unreasonable. We saw spending of large amounts of cash, growing of costs without any reasonable management, intangible asset valuations that were incorrect. And so we see these behaviours repeat themselves. And what we need to do is to look at this in a circumstance where individuals have too much power in a set of circumstances where they abuse that power.
We'll reveal the 5 key lessons ABC Learning's history uncovers in the final video. But the top line message is this: accountants and finance professionals with an eye to strategic leadership within business can play a critical role in a company's success. Because of the way they analyse business performance, accountants and finance professionals are often in the best position to see pitfalls and traps that lie ahead for a company, even when things seem to be going well. When they see this happening, accountants can and should step in. CPA Australia can equip you with the tools to do this. As a CPA, you'll have the skills to take a broader view of a business so that the organisations you work for don't have to learn the lesson ABC Learning had to learn in the hardest possible way, by the total destruction of the company.